Assalamu alaikum and welcome to the Oasis Focus on Finance show. I'm your host, Shaikh Morton. As always, it's great to be with you. In today's show, we have a look at the global and local financial and market outlooks for the quarter. We know lots of changes and developments have taken place during this period. We'll also have a look at political developments which could affect you as an investor. Joining us in studio today are Isma-el, Ebrahim and Fahad Shaikh from the Oasis investment team. Gentlemen, assalamu alaikum. Welcome to the show.
Wa alaikum salam, Shaikh.
Wa alaikum salam.
Fahad, the first question. The major global themes that have been affecting our financial and market outlooks. What's your take?
Shaikh, I think the global investment landscape is a very interesting place at this point in time. Firstly, if you look at developed markets and if you just look at the monetary policy divergence that's playing out there. If you look at the US, you've seen the US Federal Reserve increase interest rates by 25 basis points. On the flip side, if you look at Europe and Japan, you're actually seeing negative interest rates there. And that has significant implications for asset valuations. It has implications for how money flows globally. So just to put it into perspective, if you're a bank in Europe or Japan, and if you're putting your money with the central bank, you're actually going to get less back than what you gave them. Similarly, if you're an investor investing in a bond which has negative interest rates, it means you're actually paying someone to keep your money. And obviously this leads to very different behaviors in terms of, investors will want to take that money and maybe put that into property, equity, gold for that matter, and that impacts valuations for other asset classes. Similarly, investors might want to take that money and take that into emerging markets where bond yields are a lot higher, markets like South Africa, for example. And then that has implications of fund flows, which impacts currencies. So I think there's a lot going on there which you need to make sure your portfolios are appropriately positioned for. Then if you look at the political landscape, you've got the US presidential race going on, and depending who wins there, it could have serious investment implications because there's quite a bit of difference in terms of what the candidates' agendas and some of the things that they're proposing are. Then if you look at Europe, we've got the referendum coming up in terms of whether the UK is going to be part of European Union going forward or not. And again, that would have some investment implications. And that's just the developed markets. Now, if you move to emerging markets, we've got continuation of China moving away from that whole investment infrastructure model to consumption. So that's continued to a large extent, and that's been depressing commodity prices as we've seen for a while now. So it's not just commodity prices that are being impacted, but countries which actually export those commodities, it has implications for them. And then lastly, if you just consider the impact the low oil prices has had on oil exporting countries. I mean, for the first time ever, we're seeing some of the Middle Eastern economies, Middle Eastern countries thinking about imposing taxes, which obviously will have implications for consumption or confidence within those economies. So I think there's certainly a lot going on, and as investment managers, it's interesting times to make sure you're picking the right stocks, you're making the right investment decisions to make sure that you continue to deliver on long-term wealth creation and making sure that you have downside protection if there's volatility.
Yeah, Isma-el, Fahad says interesting times. Let's hope it's not that famous curse. But on a more serious note, we're seeing that the US presidential race is getting a lot of airtime. How do you think this particular aspect of international politics is going to affect us going forward?
Yes, it certainly is getting a lot of airtime, especially with some of the utterances made by some of the candidates. It's important to note that this is just the respective parties' front-runner nomination race at the moment, and then we still need to go into the actual presidential race once each party nominates a front runner. So if we look at on the Democrat side, we see Hillary Clinton edging ahead in that race. She's got about 63% of the votes versus her main opposition, which would be Bernie Sanders, about 34% of the votes. And it's important to note on the Democrat side, you need about a total of 2,383 delegates to vote for you. Consensus, however, is that in the overall presidential race, people are saying 90% consensus that she'll actually win. Sorry, on the Democrat side. Then on the Republican side, people would have seen the press, and there's a lot of talk about Mr. Donald Trump. And
the man with the bad hair.
Exactly, and it's although some still say whether it's his or not is still to be determined. That race is more hotly contested. There's still two other opposing candidates in there, in Ted Cruz and Kasich as well. And Trump is also, he hasn't even got over that 50% mark with only 43% of his delegates actually voting for him. So we could see in June in the Republican convention a further another round of voting where everybody gets a chance to vote. I think the important thing to note is that if Trump does win, he'll face stiff competition from the Democrat candidate if it is expected to be Hillary Clinton. And it could also play into the Democrats' hands because, you know, with these controversial views, people might then lead towards the Democrats. And then also importantly, just staying on Trump, importantly, because if he were to win the presidential race, we could see a lot of US policy uncertainty, which would then increase obviously volatility and as a result have an impact on the currency markets as well as the bond markets. So, and if the Democratic candidate were to win, if the Democrat candidate were to win in the form of Hillary Clinton, we'll see, I think, a continuation of the current status quo.
Fahad, you mentioned Europe previously. It's also exciting times in Europe. We see the possibility of the United Kingdom leaving the European Union, European Community. I think they're calling it Brexit. Now, how is this going to affect us?
Shafiq, if you look at the base case right now, the base case remains that the UK, as per consensus, that UK remains within the European Union. But as per some of the polls, there's still a 30 to 40% probability that in the referendum, you know, the people in the UK vote for a Brexit. And within the investment world, 30-40% is a very meaningful volatility. In terms of the impact that it has, firstly, leading up to the referendum, the uncertainty that it causes. You know, it impacts confidence, which impacts consumption, investment, and all of those things. Then secondly, in a scenario where they do vote for Brexit and they do vote for exiting the European Union, they've almost got a 2-year notice period during which they need to iron out the details of how the exit will occur, what the trade arrangements will be after the exit. And it's really during those 2 periods, the uncertainty, you know, that should have negative implications both for consumer confidence, both for investment confidence, and obviously both those factors would feed into your GDP growth prospects for the UK. Then if you take a bit of a longer term view on the UK, firstly, if you think about trade, 30% of UK's exports go into the European Union. So again, there's uncertainty that if UK were to exit, what would happen? You know, they'd have to go and have new trade pacts, new trade agreements, and you know, on a net basis, over that time period, it's likely to be negative for the UK. Then secondly, if you look at financial integration, we know London's the financial hub of the world. So a lot of banks which are based in the UK but do business in the European Union, there's uncertainty of how their access will change if the UK were to exit the European Union. Thirdly, if you look at a very important measure, if you look at immigration, for example, I mean, UK has got more than 8 million immigrants living there. Almost 50% of UK's population growth is driven by the immigrant flow that's coming into that country. And at the end of that day, with that immigration flow is coming through skills, there's labor coming through, which has positive implications for growth. So if that slows down, you know, again, that would be a net negative from a growth perspective. And then lastly, if you just think about foreign direct investment, a lot of European companies actually have their headquarters based within the United Kingdom. Again, with them exiting, you know, there's quite a bit of uncertainty in terms of investment flows. So I think putting all of that together, it's hard to see how UK would have a net positive from exiting the European Union. The only advantage that they do gain from our perspective is that you've got more political agility. So for example, rather than going through Brussels and the European Union with regards to taking any economic decisions or any sort of trade related decisions, you've got that right. You can move a lot more quicker than what you can move right now. But at this point in time, it's quite difficult to quantify the exact benefits in monetary terms that will bring to the UK. But all of that said, I think the base case remains that the UK remains within the European Union as per consensus. But like we highlighted earlier, as investment managers, we need to make sure we've got enough diversification and that we're making sure that there's downside protection in case the volatility picks up.
So Fahad, how does all of this flow into a global market strategy, and more particularly at home? Oasis's global investment strategies?
Shafiq, firstly, from an investment philosophy perspective, we've been very consistent since our inception. I mean, to put it very briefly, we want to invest in high-quality, market-leading companies which have the ability to transform that market leadership into profit leadership, cash flow, and balance sheet leadership. And at the end of the day, we want to be buying those companies cheaply so that they deliver us those long-term real wealth creation that we're looking for. From a themes perspective, some of the areas that we're looking at from a global investment point of view is that healthcare, aging populations, for example. And within that, we have a very diversified exposure to pharmaceutical companies, healthcare retailers, health service providers. Then if you look at technology, especially enterprise technology, given how technology adoption is increasing, we've got a very good exposure within our global portfolios which benefits from that, and similarly communications. And then if you take more of a cyclical view, we spoke about how lower oil prices is impacting some of those oil exporting countries negatively. But on the flip side, the oil importers or consumers who actually pay for fuel have been benefiting because of that. So keeping that in mind, we've made sure our portfolio has exposure to companies which benefit from that. And then the most important thing, we've spoken about volatility a lot. During volatile and uncertain times, you don't want to be invested in companies which have high debt on their balance sheets, because banks don't want to lend you money when things are tough. And that's been at the core of our investment philosophy, where we focus on very strong balance sheets. And overlaying all of that is very strong geographical diversification, instrument diversification, and currency diversification to ensure that there's lower volatility and that we get the downside protection that we're looking for.
Isma-el, we've had a look at the global situation with investments. What about South Africa? What are our prospects? Where are we going? All the hard questions.
I think over the next quarter, political developments will play an important element, especially since they have an impact on both the economy as well as the markets. And more importantly, any developments on that front will shape the country's policy outlook going forward. Other than that, the key things that we would be keeping an eye on over the next quarter or so would be obviously your inflation outlook. We've seen inflation tick up recently, especially with the currency weakening. Also, your interest rate outlook. We've seen the Reserve Bank hike the repo rate by about 75 bips. And then also, more importantly, the growth outlook, where obviously with an increasing interest rate environment, how does that affect investment spending? And then also, the impact of the drought on growth. So we'll be keeping an eye on that. Those will be key themes that will play out going forward. Also, more importantly to note is that, the global outlook with South Africa's open economy, we are dependent on global fund flows towards our economy. And so the global outlook does play an important role and does have an impact on the South African markets and economy. So that is why we spend so much time, as Fahad was talking about earlier, in understanding the global side of things.
What do you make of the current situation and the impact? You've already alluded to some issues are coming from it.
In light of recent events, we all know that we are building up to the local government elections. That will be important this year. And politically, the recent events, actually we saw what happened in December, where we had a bit of a reshuffle in the cabinet, especially on the finance minister side, and that impacted the rand, had a dramatic impact on the rand. So it highlights the importance of not forgetting the impact that political developments actually have on economic and market developments. So this year we've got the local government elections, and then more importantly, going forward, we will have towards the back end of this year, we'll see the ANC building up towards their 2017 elective conference. So those will be two important developments on the political front to keep an eye on. But importantly to remember that political jostling, if I can call it, political candidates will always jostle for positions, and they'll always have certain utterances. We've seen it in Trump's instance. It's important South Africa is not alone in this. We see this type of thing happening, for example, in some of the more developed economies, whether it is the UK, like Fahad discussed the Brexit earlier, or the US, we discussed that political candidacy race. However, it's important, so South Africa is not immune to it. It's important for us as investment managers, that is our job, to sort of look through the noise, or black out the noise, and sort of identify where are we headed over the long term. And we obviously develop our investment strategy to align with that. So from an Oasis point of view, we have aligned our investment strategy, taking into account these things. We obviously look at the impacts or the benefits of diversification, which Fahad also talked about earlier. So we feel that we're well positioned going forward to protect. We do feel that, however, given that the increasing volatility, and therefore we believe diversification is an important tool that we use in our investment strategy.
Fahad, Isma-el has alluded to what I call the two big I's, interest and inflation. What do you make of this on our local landscape?
Shafiq, the inflation outlook has deteriorated quite a bit compared to even 6 months ago. The rand has played a significant role there. As the rand weakens, everything that you're importing obviously becomes a lot more expensive, and it feeds through into inflation. So even if you look at, for example, the way oil prices decline, we didn't see that much of an impact coming through on our fuel prices because of how the rand had depreciated. Then, on top of that, you've got the 30-cent fuel levy that also comes into play, feeding through into inflation. And then lastly, an event which has impacted food inflation quite materially has been the drought that we've seen in South Africa. So if you look at maize prices, they've trading close to record highs. Similarly, if you look at meat prices, because obviously the drought has an impact on meat prices as well, all of that has been feeding through into inflation. And then lastly, if you look at electricity, for example, over the next few years, for the foreseeable future, you're likely to see 10% electricity price increases feeding through into the inflation number. And I think it's exactly on the back of that we've seen inflation, slipping out of that 3 to 6% target that the SARB has. And on the back of that, we've seen interest rates increase by 75 basis points recently. So I think the deterioration in the inflation outlook is here to stay, at least for this year and maybe going into next year as well. And obviously that will have implications for the interest rates, which we've already seen. And I think at the end of the day, as consumers, we need to be, even as South Africans, we need to be very careful in terms of what our gearing levels are, what our debt levels are, what our savings are, to make sure that we go through this tough time.
If I can just add to that, Shafiq, on the inflationary outlook with regards to the drought, we have, however, seen that, if we look at the long-term history of rainfall for this country, after every year where there has been a drought, we see a dramatic increase in rainfall the next year. So recently, alhamdulillah, we've had good rains. If that continues over the next few months, let's say 4 to 5 months in towards the next planting season, next crop planting season, we could potentially have a much better maize crop next year. So inshallah, if the rain continues, and if it continues in line with history where we've seen the rebound after a drought, the rebound in rainfall, next year should be a bit better on the maize front.
Amen to all of that. Now, Isma-el, our final question, how does all of this tie into our local market outlook, and specifically, how does this tie into Oasis's South African investment strategies?
So, given that backdrop that we've discussed over the last few minutes, I think it's important to be cognizant of the quality of the companies in which you invest in. And also, with the increasing volatility, stock picking becomes much more important rather than, what we call momentum plays, guys who just ride the market. Now, that is where we come in. That is our skill. And this is our time where we'd like to exercise our skill, So if we look at how we're positioned, we continue to be aligned with our objective of creating real wealth for our clients over the long term. And we continue to look at high quality companies. Now, what is high quality companies? It's those companies who have those traits that Fahad mentioned earlier, the ability to be able to generate sustainable cash flows through the cycle. Those companies that are supported with strong balance sheets, not too highly geared, or almost no gearing, if at all. And then also strong management teams, those management teams who have seen cycles, who can guide the company through, these business cycles. We've seen it, and those are the companies that we look to identify. Added to that, I talked about the tools that we use from or risk management or downside protector. And we like to use diversification. Now, there are 5 elements in that. It might be asset class, geographical, currency diversification, sector diversification, or in fact, instrument diversification. And then as well as that, if you look at our product range, we talk about balance funds. Those balance funds have got, they've got exposure to 3 different asset classes. You've got equity, property, and income, and they are ideal in this type of environment. And I think I believe we are well positioned. And then also, I think a good point to bring in, we've discussed it in the past, but I'd like to highlight it that, our funds have been well positioned in that our rand exporters have done very well with the rand where it is. Now, the rand weakened dramatically towards the back end of last year. So these guys now will start seeing the benefit, because that benefit will only start coming through now. And we've already seen it in some of our gold exporters or our gold companies who have had a dramatic increase in share price just because of the fact that, they're selling in dollars, their cost bases are in rands, so their cash flows are automatically improving.
Isma-el, Ebrahim, Fahad, Shaikh, thanks for chatting to us about global and local markets and the quarterly projections. Thank you very much.
Thank you, Shafiq.
And that concludes this edition of Focus on Finance. A special thanks to our guests in studio, Isma-el, Ebrahim and Fahad, Shaikh, who discussed global and national markets. Should you wish to watch this or any other shows, you can log in to the Oasis Crescent YouTube channel. Should you wish to contact Oasis 0860 100 786 or email info@oasiscrescent.com. Until next time, I'm your host, Shafiq Morton. Assalamu alaikum wa rahmatullah.